by the end of 2019, I was basically saying to everybody, like, look, I started doing this in mid 2010, and basically the bar was constantly getting raised in terms of, for lack of a better way of putting it, finding stories that investors would care about, that long investors would care about. Coming out of the financial crisis, people remembered risk, and they, long side investors on a widespread basis tried to, they were averse to risk. But I felt like in 2013, we reached a tipping point where, the guys who cared about risk were increasingly becoming, on the long side, were increasingly becoming marginalized. And the guys who were just like, mainlining blue pill were the ones who, ended up gathering the assets and putting up the numbers. And, in that, so it became harder and harder each year to get the average, especially institutional long side investor, to care, to not be, right, to overcome the complacency. But what enabled us to do that is the fact that with market caps growing the way they were, all of these behaviors that previously, guys at like, 200 million market cap companies, like that's where you'd find this like real, shitbag type behavior. Suddenly these dudes have got like $1.2 billion market caps, right? So while the bar to overcome complacency went up, the market caps of like the really, just the big shit bags also inflated like into our sweet spot. So it's kind of like, as these market caps deflate and the guy who was 1.2 is back down at 400 and basically below our zone, people are paying more attention to risk now. And so that bar has come back down. So I'd say the only time I felt like things were greatly out of whack is shortly after COVID started. And, I think that's self-explanatory, but just the froth and the fervor in the market at that point and the complete, not only aversion to risk, but, the more fucked up you tell me it is, the more I'm going to buy, bitch.